Welcome once again to our new informative video. Myself Deepak and I am your host in this video. Today we are discussing a very important topic. What investors want and look for in startups before considering to invest. If you are new to our channel, please like, share and subscribe. The startup culture in India has gained significant momentum and more investors are willing to put their money in new ventures. While the idea behind a new business venture is important, there are several other aspects that investors examine before they decide to fund a startup. Here are some key points that startups seeking funding should remember before approaching an investor. Few important and key points. Passionate founders with skin in the game. Revenue traction. Capable team. Ask for the right roadmap. Market size. Product differentiation. Competitive advantage. Exit strategy. Passionate founder with skin in the game. As a founder, you will have to raise the initial capital yourself. You can do this from your own savings, borrowings, family, friends, etc. But you must be willing to demonstrate you believe in product, service enough to invest your own money. You will have to get the business off the ground on your own. Having a passion for their startup is pretty easy to come by for business founders. They believe in the product, service they want to provide. They are confident that it is an improvement over existing products or is a new way to address an old problem, in other words, the better mousetrap. But how deep is their passion? Are they willing to be told no over and over and over again and keep going? If you like this video till here, please like, share and subscribe to our channel and hit the bell icon so that you don't miss our notifications of our new videos. Revenue traction. Most of the time, a new venture will have to demonstrate that it has a marketable product or service, typically having begun operations and demonstrated significant ability to sell the product or service. In some way, the venture must have a revenue traction to show investors. In simple words, there should be paying customers using the product or service. Capable team. More than the idea and the concept of the startup, the most important thing that the investors look at is the founding team members. Investors need to be convinced that the team is capable enough or has competent skill sets to execute what they're planning to do. Mature investors silently see the tuning, trust and loyalty between the team members as well. If they are investing in a team, they want a rock-solid one, so I strongly suggest you only work with people you can spend a whole life with. It's like looking for someone to get married to. You don't want to take hasty decisions. Investors also try to understand if you're financially responsible. They're going to give you an immense load of funds in a bank account to handle. One needs to have full faith that you won't go rogue or maybe even have a heart attack after seeing too much money in a bank account. Ask for the right amount. As an investor and a financial consultant to many wealthy individuals, you will be surprised if I tell you about the number of startups I see daily with great business ideas and asking for the wrong amount. It is more dangerous to ask for a lesser amount than to ask for more than what you need. Founders need to pay themselves a decent salary as well. A startup needs to have enough funds in their bank to either reach a point where they're profitable and can survive on their own now or can raise the next round of financing. Roadmap. Fancy revenue projections of 3 to 5 years is a shame according to me. They don't prove to be correct in more than 95% of cases. Very limited people can actually do it accurately for a startup. So, according to my understanding, having a correct roadmap is more beneficial than just projections. An entrepreneur should focus more on how will we achieve the target revenue? Then we have XXX revenue projections for the coming 5 years, and we'll be billionaires within 3 years.
Target market size. Most investors are looking for a business opportunity with growth potential. Accordingly, if your market is only one city or around just your headquarters, your growth is limited. You need to have a market with significant reach, at least regionally depending upon the nature of your product. However, a large enough market where the economies of scale can be incorporated into your operations to increase margins and profits will be needed to attract investors. The bigger the target market, the bigger the interest in the investors. Product differentiation. Competitive advantage. This is going to be a critical issue for investors. What makes your product/service unique? There has to be something about your product that sets your startup apart. If you have a never-before-seen product and you're the first to the market, that is very important. Your product or service should stand out from the rest. There should be less to no competition. And your startup should have high entry barrier. Exit strategy. Investors have two primary financial questions about projects: how much do I need to invest, and when do I have to invest it? How much will I get back, and when will I get? Both of these questions can be answered by a thorough financial projection. The type of projection that investors want to see includes a complete description of the assumptions behind the model, a complete set of pro forma financials, income statement, balance sheet, and statement of cash flow, a return on investment analysis using capital budgeting techniques and various ROI calculations, sensitivity analysis around key variables, cash sources and uses report. Contact us DSBC. Deepak Singh. Call/WhatsApp +919241311289. Email deepak@dspeedconsulting.in.